Disclaimer. Trading financial instruments carries risk. This material does not contain investment advice, nor should it be viewed as a personal recommendation, or an offer of, or solicitation to trade in financial instruments. Past performance is not a guide to future results.
Hello everyone and welcome to a new ATFX report. Let's give an update. My name is Gonzalo Canete and I'm doing this video to give you the last news, the last 24 hours, eventually also the last movements on the markets for this week. Today's Thursday, 1st of February, and we're going to take a look on the impact or conclusions that the market is taking after Jerome Powell's speech last night from Federal Reserve. So let's share the screen and let's go into details. Please remember, I'm always doing this summary every morning freshly for you. So if you go to ATFX Connect blog, you will get access to the whole report, even to the previous ones published yesterday and the previous days. So going into detail, one important thing is that yesterday the words from Jerome Powell could be interpreted like a kind of disappointment for the market because he was not actually giving the response that the market was looking for. He was not giving any kind of confirmation of interest rate cuts for March, which is something the market was discounting for the previous few weeks. Even I bring to you in previous updates also the comments done by Baltic from Federal Reserve, also one of the officials from Federal Reserve. He was making a few comments a few days ago, last week particularly. He was making a few comments saying like, in any case, the interest rate cut will be in May, not on March. And that comment, by that time, it was a Friday, it was actually pushing the market up, because it was an implicitly admission that the Federal Reserve will cut interest rates. However, yesterday, the words from Jerome Powell was not telling us clearly when exactly the interest rate cuts will come. And actually, a few comments, I just compilate the comments here on my report, but a few comments that he did was inviting us to even think or consider the idea that maybe he's not so sure about the interest rate cuts, at least not so early, because as he said, let me share the full screen so you will see on details the text. But he was saying, Jerome Powell highlighted the strength of U.S. economy, falling inflation and robust labor market, and a stronger economic growth. Not exactly data that will suggest an urgent need to cut interest rates. First of all, if you mention that U.S. economy is going super well, why there is a need to cut interest rates? Additionally, he refused to declare victory in the battle against inflation of the last 2 years or expect soft landing. He didn't confirm that the battle against inflation is over. He neither confirmed also that the soft landing happened. Nor did he promise that rate cuts will take place at the next meeting in March, something that the market has been discounting for only a month as the most likely scenario. Brackets. Inflation is still too high. Ongoing progress in bringing it down is not assured until there is, and brackets again, greater confidence that inflation is moving towards the central bank's 2% target. Rate decrease will not be prudent, Powell say. So just these simple lines, just this simple comment that it will not be prudent to cut interest rates yet. The inflation fight is not over. All of these comments makes a clear statement for the market, and it caused, my friends, disappointment on the market. As you can see, the market was dropping since then, clearly, and we have seen also that this is the SP500, mini SP500 future. But if you take a look on the spot, you will see that actually since then we have been dropping because obviously the market was expecting something else, some stimulus. I draw just here 50% of the whole range cost, and the whole range was actually a projection from the previous one, from this lateral movement we registered a few weeks ago. And what I was doing is just expect the movement was replicate in the next movement, which is something what happened. It's exactly what happened. For those ones who follow the previous videos, you're welcome. The charts were right. The projections we did was actually, it seems to be accurate with the movement of the price. Now, in the meantime, European market has been dropping also, but guess what? During the European session, it's actually recovering, rising part of the levels that it was dropping since yesterday. So it surprised me the fact that European market, even in these conditions, when macroeconomically speaking, we can take a look now to the calendar, PMI, inflation. Well, inflation is reducing in Europe too, but PMI, industrial production, many of the macroeconomic data coming from Europe are clearly showing us what we suspect it is a recession. And therefore, how is possible the European market is still rising with these conditions, with a recession coming? Not only that, it's not just rising, it's also trying to reach new maximum levels in around 17,000 points. As you can see, actually, yesterday we did, what was the maximum? 17,030 points on DAX 40, which is new record on private equity on German market. Why? We also got the numbers from the growth rate from economy, Eurozone economies, and in particular Germany and France were showing us a contraction on the economy, either zero growth or a contraction, like is the case of Germany by the Q4 2023 was minus 0.3% of growth rate. So who is actually investing in these markets if the numbers, macroeconomically speaking, are telling us that this is an economy in recession? So what is the expectations? Why the stock exchange is actually discounted those movements uptrends? Okay, so that's the main question, and that's why I would like to invite you to think about that and take a few considerations. Now, moving forward, we also got let me check. Oh yeah, regarding the macroeconomic data, yesterday we had let me share the whole screen. We had the ADP NFT surveys. The preliminary result shows 107,000 jobs versus 145,000 jobs expected, and 158,000 jobs in the previous period. But remember, tomorrow is when we got the right numbers. Tomorrow is when we will know the truth, when no farm payrolls will be published. So pay attention to that data tomorrow. From the European side, we also got the PMI published today, which shows contraction in Europe, except Norway and Greece. Some, however, of between the contractionary territories, some better than expected data, as is the case of Italy. Is the only country, going to the calendar, has now still a contraction on the PMI, but given that contraction is a little bit better than expected, 49.5. In the case of Spain also too, 49.2 versus the 47.9 expected, and so on. But the rest of Europe obviously is showing to us, as you can see, parameters under 50, indicating a contraction on the manufacturing and also service activities for production in Europe, which is not good at all. Now, the Eurozone inflation rate has also been released, showing a slightly rebound to 3.3% in January versus 3.2% expected, and annualizing rates to 2.8 versus 2.7, which means, again, not super good news for Europe, because it means that inflation could be reborn or is not, as Jerome Powell say, the battle against inflation is not over. So let's keep an eye on this, because all of these interpretations, all of these numbers could change the confidence on the market, could also change the interpretation of the monetary policies, and therefore could change the scenario we are facing coming forward. It's also interesting to mention the China's stock keep falling. I mentioned last week on my previous reports the evolution. Let me show you the charts. The evolution of Hang Seng from Hong Kong, and also evolution of Shanghai Composite. So as you can see, both of them were trying to rise during the last week after the announcement from Chinese government of two main measures. One of them was a fiscal package. It was a new budget to spend like 278,000 millions, if I'm not wrong, of dollars in new stimulus for the economy. And in the other side, the monetary stimulus, Popular Bank of China was announced also coming interest rates cuts. Well, that news was apparently for the Thursday and Friday last week accepted positively by the market. It was rising. but it has been dropping back again. So it seems that the market is not actually taking or buying that announcements from the authorities in Chinese market. And pay also attention to the fact that China is dropping while US and even Germany are touching new records, new maximums, and has an exception of SP 500 for the last few hours. We need to admit that for the last month and a half, US market has been doing really well. The surprising events here is like equity in China is not correlated with equity in US, has been dropping since then. As you can see here, it has been really bad months, also end of 2023 for the Chinese equity. And it's a kind of this correlation that is very interesting to analyze, because it means that the Chinese equity is super discounted comparing with the US equity, which is in top highs. If you are skeptical like I am, I will just keep my eyes on the US equity in case of any new surprise, because we are under the risk that maybe this market, particularly European market, is artificially inflated with these numbers that we are seeing. Let me finish with a summary of the main charts I have done yesterday to simplify what's the situation of many different equities. You got on the screen right now gold. I'm gonna put full screen so you can see in details the levels. As you can see, gold seems to be safe or confident over $20, $30, $20, $50 per ounce, but still nothing guarantee you that by the end of the month or by closing this month, because it's a super long-term chart, gold will drop again under those levels and start to move in the range of $2,000 per ounce to 180, 120, 180, 50, 180, $25 per ounce, or even going to the bottom in the next 6 months or year to $1,650 per ounce. How this possible, or in which context this could happen, Gonzalo? Well, this context could happen if a few things. First of all, global risk is down; it's over. There is no potential war on the table, and that will make sense only if we want kind of stable global situation for the U.S. elections, for the other elections also running in Russia, for example. Right? In those cases, we don't want to scare the people, and maybe in that scenario, gold, there is no need for gold to keep rising. Also, and most importantly, the strength of dollar. If dollar is getting strength again, and it's also receiving the flows of money from Europe, which is getting in worse situations from a macroeconomical perspective, it means like the flow of capital will move from euro to dollar, and therefore dollar will still getting strong against the euro, and therefore gold is not needed to save value, right? It's a kind of medicine for a weaker dollar. But if dollar is rising and is strong, there is no need for gold. In case of, or in the case of the next commodity, the black oil, which is the oil, black gold, sorry, which is the oil, we can see that the main targets are $85, even $95. If those levels are not breaking up, don't expect too much from oil. We have seen that eventually we could expect kind of breakouts on this market only in the case that Middle East tensions escalate or rise, which is something apparently is happening for the last 2-3 weeks, and still oil market seems to be completely, I will say, sleeping at the moment, because we don't see clear movements on the market regardless the tensions in the Middle East. Which is not normal neither. One of the reasons could be maybe weaker demand from the energy side. I shared on my social networks a few days ago the importations of India in terms of oil for 2023, and it was actually decreasing in relation with 2022, which means like India, for example, one of the biggest economies in the world with a massive industry, is consuming less oil. It means that industrial activity worldwide seems to be decreasing, and therefore is the demand what is failing in oil. Plus also the supply cuts that producers of of oil tried a few months ago. Between September and November is when they were negotiating, and when we saw that Saudi Arabia, with the proposal was just to cut 2 million of barrels per day, and they ended doing 900,000, which is less than half of the gold they got it. What else we got here? Oh yeah, you got a long-term chart for oil. As you can see, what is interesting here is the oil either has been for years quoting below $68 per barrel, or either below or either above. And in this case, I don't think we are in conditions to consider that oil gonna drop below $68 per barrel, and therefore we probably can expect that this movement continues going up regardless of the situation of the market. What else? This is IBEX 35 for Spanish market in Europe, which is rising. It was dropping after Jerome Powell's speech last night, but it has been rising to the main levels again. As you can see, maybe 10,300. Keep in mind, this index is really volatile compared with others. It's not like DAX 40, but it usually follows DAX 40. So if you see any divergences between DAX 40 and IBEX 35, maybe you can find opportunities there. This is long term, which could be eventually canalize the price. As you can see, the channel is completely a downturn channel, so it could push the market back to 8,500 points, even 8,000 points for that index. And this is DAX 40, German market, as you can see, also facing new maximums, but we can find a clear pattern, which is a bullish channel, bullish trend. But if this channel actually canalize, and this is super long term, we're watching since 2009, canalize the price, maybe we could see a DAX turning even now, or by 18,000 points, turning to new bear trends and moving back to 15,200, 15,000 points, right? And what else? I think that's all. We got also Nasdaq here. We were falling yesterday. Probably the next levels to move is to 16,000 points. We also got here the Russell 2000, and we also got the Russell 2000 in long terms. As you can see, also Russell 2000 got 1, 2, 3, even 4 new tops there. And if this market, basically this index, Russell 2000, represent more than 2,000 small and middle caps companies in US equity, and if the index is not moving clearly and strongly below 2,000 points, I will not be very confident on a bullish movement on the market. I think that's all, my friends, and I hope you enjoyed this report. I try to cover all. Remember, if you want to go into details, even geopolitical events I have mentioned here, which is the case of United Nations resolution in the case between Ukraine and Russian war. Also, the visit of Vladimir Putin to Turkey in the coming week, next week, I believe, 12th of February, actually. What's exactly the relation? What's what we could expect from that, which is actually could affect the commodity markets, because it's related with the intentions of Turkey to mediate between Ukraine and Russia, particularly in the case of the grain deal. What was the Black Sea Grain Initiative, which is trying to restore the exportations route by sea of Ukraine for grain, for agriculture. And I believe this is a very interesting point, this very interesting thing this is about to happen. Why? Because European Union is right now, even when the media is not talking about this, is facing super massive strikes from agriculture sector. Many of them, farmers are protesting against the Ukrainian products going into the European market. So keep an eye on that, and I hope you enjoy. Again, if you like it, please give me a like, and if you are not subscribed yet, subscribe to the channel if you like it, and leave me the comments. And if you want I analyze any particular asset, just you can request me either by email or either by the comments on the video. Let me share with you my contact. So if you want to keep in touch with me, you can just send me an email, and also I can include you in my newsletter every morning by ATFX Connect. To you, the market snacks every morning, a summary on your email, completely free, about what is going on, analyze case by case every morning. Okay, take care and thanks for watching. Bye bye.